Now, a lot of dividend-focused or income-focused investors seem to question the idea of if or if not it's possible to earn enough dividend income or distributions from higher-yielding investments to get to the point to where you can pay for some bills, or maybe even to the point to where someday you can cover all your bills and then some. And to answer the question very simply, can an investor build out a portfolio full of high quality, high yielding investments that can cover their bills completely? The answer is completely yes. It is 100% possible. I mean, right now, as you can see here on the screen, this is my long-term portfolio, which by no means is full of only higher yielding options. I mean, I have shares of Apple stock in here, Realty Income, etc. But as of right now, my portfolio currently earns me around $7,400 on average per month. And even though I'm right now reinvesting those dividends into more different assets, I 100% at this moment could cover all my bills and then some with dividends and distributions alone. But in this video specifically, I'm going to go through and share with you exactly how an investor can cover their bills. And we're going to talk about one very important specific bill for this video's sake. And on top of that, I'm going to share with you 5 different high quality, high yielding dividend ETFs that 100% can get an investor to the point to where they can cover that bill and then some more in the future. So if you happen to be an investor that wants to get to the point to where you can build a portfolio that can help you pay your bills, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So for this video's sake, we're going to be talking about a very common bill that every single one of us have, every single one of you guys that are watching this video. We're going to talk about our cell phone bill, which according to this article, it says the average price of a US mobile plan is currently $141 per month. And this is a very, very important one, especially to me, because this was the first bill that came to mind when I was building up my dividend portfolio a long time ago. I'm talking years ago. I remember getting to the point to where I was earning enough dividend income to where I could then, if I chose to, cover my entire cell phone bill and then some. And I've talked about this before on the channel, so sorry if you've already heard about the story, but it was a very important sort of turning point for my investing journey. And it really was the first taste of freedom. Like I shared with you guys a second ago, I now am to the point to where I can, of course, cover all my bills and then some, but of course that took many, many years. But for this video's sake, we're going to go through 5 different high quality, high dividend yielding ETFs that are going to get us to the point to where we can earn at least $141 per month. And I'm going to show you that you can do so with a lot less money invested than you think. Now, the first ETF that an investor could use to earn $141 or of course more per month in dividend income with relatively a small amount of money invested is one of my favorites, JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. Now, JEPQ is a simple covered call style ETF. I'm sure you guys either have this one in your portfolio, or if not, you've definitely heard about it. And check out my channel if you guys want to see more in-depth overviews of any of these ETFs. But for this video's sake, we're going to be talking about numbers, talking about dividends, and going over the math on how an investor can pay some bills with high yielding assets like this one. Now, when it comes to something like JEPQ, because this is a covered call style ETF, it's not necessarily going to pay you the same exact amount every single month. So this is going to be something to think about if you, of course, are building out a higher yielding portfolio in order to cover your bills. You might want to make sure that you have a little bit of margin just in case one of these investments might pay a little bit lower or higher depending on the month. But just to give us an average, let's say JEPQ, for example, pays an average of 40 cents per share per month. That means that in theory, an investor would have to invest into 352 shares of JEPQ in order to earn enough to cover their cell phone bill, that $141 per month bill. Now, because JEPQ is just shy of $55 per share, this means that in theory, if an investor invested around $19,000 or so into JEPQ, they on average could likely cover their entire cell phone bill from dividends alone. But things are going to get a lot easier, a lot faster, because we are going to be going up to higher and higher yielding options. Once again, these are all relatively safe in my opinion. They all offer a total return, and I personally hold on to every single one of these assets in this video. Now, of course, just like any other investment, these all come along with their own risks though, so do your own due diligence and don't just buy something because it's high yield. But the next ETF, next high yield ETF that can offer enough investment income to help an investor pay for some of their bills or all of them is SPYI, the NEOS S&P 500 High Income ETF. Now, this is another covered call style ETF, one of my favorites across the entire market. It tracks the S&P 500, utilizes a covered call overlay, does it very tax efficiently, and also has the potential for some upside. Now, this ETF is higher yielding than JEPQ, for example, offering almost a 12% trailing 12-month dividend yield. And the other cool thing about SPYI is that it pays relatively the same exact amount, more or less, every single month. Now, because SPYI pays roughly 49 cents per share per month on average, that means that an investor would have to buy around 287 shares of this one in order to pay for their cell phone bill, that very pesky expense that I was super excited to reach back in my day. Now, because this ETF is around $51 per share, that's only $14,000, maybe $15,000 invested in order to pay for a bill completely. But like I promised, it's only going to get easier from here. SVOL, the Simplified Volatility Premium ETF, another high-yielding option. One of my favorites. This ETF has a very unique strategy. It shorts the volatility index, which means that as long as the market is not showing peak volatility, this ETF is going to probably do pretty well. Now, SVOL offers a 16-17% trailing 12-month dividend yield with more or less a 30 cent to 28 cent, something around that distribution that we've seen over the past year or so. Now, this means that if SVOL pays around 28 cents per share per month to an investor, they would need to buy around 500 shares of it, which, keep in mind, this ETF is around 22 bucks per share. So we're talking $11,000 invested into SVOL in order to pay for your cell phone bill or whatever other bill is $141. Now, a few more examples. Another one of my favorites. This is a newer position, another high yielder that offers a total return that's positive and a strategy that I believe in. This is SPYT, the Defiance S&P 500 Income Target ETF. Now, as you see right here, this ETF is 20% as far as distribution rate. So this ETF is targeting a massive amount of income for investors every single year, which, keep in mind, this ETF is relatively new, so we're going to have to see how this plays out. But at least so far, historically, SPYT has been paying more or less 33 cents per share per month, which means an investor in theory would need to buy around 427 shares. Keep in mind, the ETF is 20 bucks per share. That's $8,500 and some change in order to reach $141 more or less per month. Now, last but not least, we're going to talk about a super high yielder. This ETF has the potential, of course, there's risk involved, but the potential to earn a ton of income for investors, especially investors that are looking to use some income to pay for their bills, etc. Now, we're talking about ZIVB, another income-focused ETF that strategy involves, once again, shorting the VIX. Now, ZIVB has been paying out more or less 49 cents every single month to investors, and keep in mind this ETF is under $20 per share. Now, this means an investor would need to buy around 287 shares of this one, in theory at least, in order to reach $141 per share per month, which is only over a $5,700 investment. Now, just because those different ETFs that we went through in this video do offer some high potential for income on a monthly basis, don't of course mean that they're the perfect investment option for you personally, but I just wanted to make a video talking about the idea of using dividends, using distributions to pay for your bills. Because after all, that's exactly what I'm planning on doing right here with this very portfolio that you see right here. That's paying me right now around $7,400 per month. As of right now, because I'm only 32 years old, I am reinvesting these dividends into more stocks and ETFs consistently, but at some point here, maybe a year from now, maybe 2 years from now, maybe 5 years from now, whenever I decide to do so, I'm going to use some of, if not all, this money to pay for things like bills, pay for things like expenses, help out family and friends, etc. So now that I shared exactly how an investor could utilize high-yielding, dividend-paying ETFs to pay for something as simple as a cell phone bill, I now want to hear from you guys down below. As of right now, do you have a bill in mind? Do you have an expense in mind that you're trying to get your portfolio to the point to where you can cover it with dividends alone? Let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.